Hi everyone, hope you're doing really well. Josh Harrison here. Very welcome to the channel and very welcome to this video where we're going to be answering the question, how do we know how much we can actually buy a property for? And I've got on screen here one of our spreadsheets that helps us calculate and come to that decision. It's the buy, refurbish, rent, refinance. It's version 1 with the NMLI, no money left in, and I'm going to walk you through it now. Now, a couple of things I should just draw your attention to on a macro scale. First of all, there's actually 5 sections. Section 1, 2, 3, 4, and 5, and then ultimately, once all these cells are populated, it will give us a return on capital employed as a percentage. And I've talked about that in our mini-series, and I've also talked about comparables in previous videos too. So if you haven't seen those, feel free to check out the iCards on screen now, and they will take you to those, and then you can come back and watch this one. So essentially, the principle here is start from the end and work backwards. Think about where you hope to be by the time you've purchased a property and you've done the renovation and you've rented it out and you hope to refinance. Where do you hope the property will be in terms of its value? And then calculate back. So what we like to say is plan backwards and then work forwards. And it starts by understanding through your comparables what you think the property is going to be worth once you've done the refurbishment. And in this case, the example I'm giving is going to be worth £130,000. And you'll notice this is the first of the yellow cells I've particularly drawn your attention to. Some of these cells are yellow and some of them are white. Simply, this means the yellow cells are one where we have to input some form of data, and the white ones are things that will auto-calculate, and when I click on them you'll see the formula displayed. The only other colours, each of these are different coloured. It just helps me understand which section of the process I'm working on at that given time. But the whites and yellows are the ones we're interested in for the purposes of this video. So £130,000, and we're going to be refinancing it using a 75% loan to value mortgage or a 75% loan to value further advance. And I'm going to do a separate video on that coming up to keep your eyes peeled. So the property is now worth £130,000 after the refurb, and I'm using a 75% loan to value refinance. That means the equity I have to have in it is £32,500, 25% of the 130. Now notice here, this is equity and not deposit. Deposit is how much money you have to put in to purchase it. Again, often expressed as a percentage, but by the time you've already owned a property and you come to refinance, you need equity. It's equity you need, and therefore equity is the word we've used. So what we do so far is £130,000, and we're going to deduct £32,500, which takes us to £97,500. And then we come onto this section here, delineated by this dark line, costs. Now, just notice stamp duty is not yellow. It's also calculated, but also in terms of costs, it's not included in this sum calculation from F8 to F18, but it is a cost, so it's in that box. I'll come back to that in a moment. So legal fees, working with your solicitor, approximately, these are approximate figures, you know, for purpose of illustration, but £1,000 for us. A mortgage fee 1, and there's broker fee 1, but there's the fees here, £300 and £300 respectively. The cost of a survey, £450. The cost of the refurbishment, I'm saying, is going to be £20,000, and building insurance, £250. Again, there's other costs here you could consider. Make sure you include them when you are calculating what you can offer on a property. I will just a quick note here: the refurb cost to calculate, we do calculate that. That's going to be. I thought about doing a separate video on this. It's probably going to be several videos on calculating the cost of refurb. But for the purpose of this one, we're going to say it's £20,000, which then gives a total cost of those cells added together of £22,300. Now we move down to this section and we get the discount required, which is the combination of the equity, £32,500 of equity, and the cost we've just calculated, £22,300. And when I say discount required, it's the discount from the gross development value. So this is £54,800 from the £130,000 that we started with. Now, the money left in. Now, if you notice up here, no money left in. So I could put this as 0. There are. The money left in is none. I don't want to leave any money in this deal upon refinance. However, you might say, I'd like to leave £10,000 in. Or I'd like to leave in £15,000, or whatever it might be. And for the purposes of this illustration, I'm going to say £13,000, because we have a principle not to leave more than 10% of the gross development value, which then produces a provisional price. So this is £130,000, subtract the costs that we've just calculated, the equity and the other costs, and then we add on the money we can leave in, and that provides us with a provisional price of £88,200, and then we calculate stamp duty, 3% in this case, because it's, and if you look at the description below, there'll be a link to this. There are stamp duty bandings, and you'll be able to see on the website and included in the description. But for us, it's 3% of this probably price point. So 3% of £88,200 is £2,646. And now we deduct that stamp duty from the provisional price, and we are left with an offer price. So this is £88,200, subtract that stamp duty, gives us an offer price of £85,554. And you might say, well, actually, the stamp duty of 3% of £85,554 would actually going to be less than £2,646, because that's 3% of the £88,200. Yes. However, if you try to calculate it any other way, Excel will return a calculation error, where you're trying to ask the cell to calculate itself, to do an activity and then produce an answer within its own cell, which of course it can't do. So although this stamp duty is slightly more by a few £100, which means our offer price is probably a few £100 too low, in the big scheme of things, we're talking about tens of thousands of pounds or hundreds of thousands of pounds. This is completely reasonable in terms of degree of error. So therefore, our offer price is £85,554 if it's going to be worth £130,000 done up, and these are going to be the costs associated with obtaining it. So I hope you found that interesting. If you've got questions about this, or if you have questions about other aspects of single buy-to-let and the Burr method, then feel free to get in touch. You've got the comment section below, but also you'll see in the description is my Instagram account, and people do actually get in touch with me on that, which is great. And I'll try to include questions and comments that I get asked in subsequent videos. So feel free to get involved. If I could just say at the end, if you're not subscribed and you would like to be, then please just hit the subscribe button. It's completely free, and you get notified if you hit the bell notification icon of all the content that we'll release. And also, if you give us some feedback, that'd be tremendously helpful. If you can just give us a thumbs up, we do really appreciate it if you found this helpful. Thank you ever so much for your support, not only in watching this video, but all the videos you've watched in the past. We look forward to working with you and seeing you again online soon. My name is Josh Harrison. See you next one.